The first journal that we're going to take, the first special journal, I should say, that we're going to take a look at is the sales journal. If we look at all of, I mean, what is the majority of a business? What is the majority of the type of transactions that they do?
Buying.
Well, buying, selling, right? Sales. That's why you're in business, to sell stuff and make money. In a merchandising business, we kind of, recording those sales transactions in general journal is kind of like doing it the long way, right? Okay, every transaction has basically the same accounts that are being used. And in most cases, these transactions are a one of two things. It's either going to be a sale on account or a sale using cash. The sales journal is used for all entries, all transactions involving sales, so involving the sales of merchandise on account. All of those transactions utilize the same account. They utilize sales, they utilize sales tax payable, they utilize accounts receivable. So instead of kind of doing it the long way in the general journal, we've created the sales journal. Now each entry can be modified or morphed down to one line rather than 4 when you include the source document in the journal ledger. So we're starting to use special journals to record these different sales. There can be 4 of them that we're going to go through, eventually get through. Okay, 4 journals are listed in your study guide. The one that we're going to be taking a look at today is the sales journal. Okay, once you get used to these journals, it's really going to simplify these transactions. Again, the sales journal is used to record sale of merchandise on account. Only the sale of merchandise. If we sell something else, we need to use a different journal. So the sales journal is only used to record transactions of sales of merchandise on account. So let's just go ahead and take a look at some examples here. We're not going to go through all these examples because really they just kind of do the same thing over and over and over again. Let's take a look at the first example on February 7th. Sold merchandise on account to Wilton High School for $2,000. Sales slip $350. The school is exempt from sales tax. Most public institutions don't have to pay sales tax. So that tells us then that sales tax right there is probably going to be 0, right? We're not going to have any sales tax. This would be kind of the one exception. But we're just using this sales journal, knowing what you know about recording transactions. Again, starting with the page number. That help a little bit. Starting with the page number, starting at page 15. The date again, we can do our year just to make it formal here. February 7th. First column asks for the sales slip number. This is our source document, so we don't have to worry about putting a source document down anymore. Okay, our sales slip number is $350. Customer account that's going to be debited is Wilton High School. Okay, we're not going to touch that post-reference column just yet because again, that's reserved for when we get to posting these transactions. We're not to that point yet. And we have a sales credit. The sales account can be credited because the sales is increasing. Okay, by $2,000. Again, high school, no sales tax, so that's going to be blank. Account receivable, $2,000. So we just recorded in the sales journal the sale of merchandise on account. We used one line, which in this case in the general journal would have taken us 3. Okay, so to simplify, we're using the same columns. We have special columns for those accounts. Okay, pretty straightforward, right? Let's take a look at another one. Let's look at February 12th. Merchandise cost me $600. Was sold to Molly Bohannon on account plus $36 sales tax. Sales slip $351. Again, put our date in, sales slip number 351. The account name is Molly Monahan. Merchandise cost $600. We have a sales tax, $36, for a total of accounts receivable, $636. The rule of debits and credits still apply. Debits and credits still need to be equal. So again, if you look up here, if these two columns add together do not equal this column, something's wrong. Okay? Let's take a look, jump ahead to February 25th. Equipment was sold on account at Hampton School District for $3,700. Sales slip, $353. Again, the school is exempt from sales tax. Okay, I'm gonna be honest with you. This is the first version. This textbook is kind of the first version of and there's some errors in it. Okay, I think they kind of goofed up when they did this. Because this transaction cannot be recorded in the sales journal. Why not? Well, we have sales tax.
Well, yeah, but like,
And we don't have to put something in here, right?
Equipment is not merchandise.
Say that again?
It's equipment, it's not merchandise.
Yeah, we're not selling merchandise, we're selling equipment. The sale of equipment does not get recorded under merchandise, or under sales, excuse me, right? If we were going to journalize this transaction, what would that journal entry look like? What do we need to have happen? Equipment or supplies, whatever, we need some type of account, right? We need some more information.
yeah,
So either equipment, whether it's computer equipment or office equipment or whatever the case is, some type of equipment account needs to be debit or credited. Which one is it?
debited, credited,
Credited. Why?
as you didn't say anything on debited.
You sold.
What kind of account would equipment be? Asset, liability, owner's equity, all those options that we have.
Owners, assets. Oh, it's a liability. Oh, they didn't say
You're
so.
running out of options here.
I know.
Pretty soon you're gonna have them all named.
I'm waiting for you to say something.
Pass.
Megan, take a guess. You've got asset,
I gotta say asset.
asset. It is an asset. An asset account, you own equipment, right? Okay, so asset account, decreasing, assets have a credit, decrease. The equipment would be decreased or credited. Anything else? Any other credits? Now this is kind of weird because you wouldn't pay sales tax on selling something that you already own. Okay, but if we did, the sales tax would be credited as well, right? What would be our debit account?
Accounts receivable.
Well, either cash or bank or account, depending on, it says on account here, right?
Yeah.
Okay, so it would be accounts receivable, or it could be accounts receivable, and the amount would be
3700.
3,700. There's no sales tax. If it was for cash, then it'd be debit would be cash and bank. Okay, but the bottom line is because this is equipment, this cannot be recorded in the sales journal.
And what would that?
Okay,
It'll just go in the.
that would go in the general journal. Yeah, general journal, or one of the options that we have, you can see it in the front of your study guide. One of the options that we have is something called a cash receipt journal. If this was a cash transaction, then it could go on that cash receipt journal as receiving cash. Okay. As far as posting this to the ledger, okay, it's not a big deal. Okay, because We will not total or post individual amounts to these accounts. We're only gonna post the total amounts to the account. But we would post to the subsidiary accounts. We've ever been using subsidiary accounts here for the last couple chapters, right? So we're gonna adjust the accounts of Wilton High School and Molly Monahan in those subsidiary accounts. Okay, they're gonna look just like we did before. Okay, we'll take a look at those a little later. Okay, the difference is we're just gonna check off here in the post-reference account because the subsidiary account does not have individual account. Okay, so as you post the individual amount for accounts receivable in the subsidiary account, we just check those off. Okay, and it would look something like this. I've got some examples here. I didn't really think that we needed to specifically go through. That was pretty straightforward. But there are the examples. Okay, posting the subsidiary accounts. First one. Stephen Howells. Okay, May 5th. Post reference is going to be S5. I know you can't tell the difference in my S's and my 5's. Okay, but I can. Post reference is S5, stands for Sales Journal. Page 5. Debit for 481. Give us a $480 one balance. And then just check it off for both things. Okay, but again, we're not posting totals here, or not posting to the sales tax in the sales account. We'll post the totals in there. Okay, so if we get to then, and in these journals at the end of the period, what we'll do is we'll make sure that everything is accurate. Again, we're building in some check systems here. So after we have a number of transactions for the month completed in that sales journal, we're going to do what's called footing. Okay, footing is like a temporary total. When footing, okay, so you know the directions, top to the foot, prove, total, and rule. Okay, so we're going to foot, which means that we're going to add up all those accounts. And it'd be a good idea to add up all those accounts and put the totals down in pencil, because you're just checking to see if they're going to come out. Okay, you don't have to add them up. I've done that already for you, so I have the totals. So when we foot, we're going to put in real small numbers, kind of at the top there. I'll kind of zoom this in here for you. Those totals, because we think they're right, but we're not sure. Okay, again, you got kind of got to test your handwriting skills here. Write small, write legible. So those are just adding up those columns. Okay, that's the footing part. The proving part now is just proving that debits and credits are equal. So over here in this customer account debited column, okay, we don't have a whole lot of room here, but all I'm going to do is I'm going to put make my own column debits. So I'm going to list all the debits that we have and those amounts. In this case, it comes from the accounts receivable. 2022. I'm going to list all of the credits We got one for 1887 and 113.22. If I add those up, and I'm kind of around the room here, I get 2022.
2022 for debit.
Oh, take that back.
Did you just write down the debits wrong up in the top right for receivable?
Yeah.
Okay.
So I have my two credit columns, my debit, just proving that they're equal. And they are. Once I have them prove that they're equal, then I can go through and I can rule. And again, I recommend that you use some type of straight edge. If you want, I'll even give you a straight edge. And I've got a couple of these rulers I can give out to you. We're going to write these numbers down again. And since they come out, we can double roll. I mentioned before that we're only going to post the totals. And we already posted the individual account receivable amounts to the subsidiary ledger. Now we have to post the totals to the general ledger, the accounts receivable, sales tax payable, and sales accounts. We have the totals here listed, so we're just going to post those totals. Accounts receivable. Okay, we're doing this on October 31st, and we add the totals, word totals there, so I know those are totals. And then post those on October 31st. Okay, this is coming from Sales Journal 15. My accounts receivable total is 2022. Gives me a balance of 10,000. $752. How am I going to identify that I posted that? Underneath the total, in parentheses, I'm going to put the account number. And post it. Just like in the general journal, we put the account number in the post reference column. Same thing for sales tax payable. And for the sales account.
Is totals indented then on the sales journal?
Say that again?
Is the word totals indented then?
Yes. Yes, the word total is indented. pretty straightforward once you understand what's going on. The hardest part here is gonna be is choosing which journal
Put the accounts
to
in.
put the accounts in. With the transactions. Okay? Do you want me to go through the, well, let's stop there. Okay? You guys had to work, your brains are, some of you, your brains are half mush.